Hello there, Maverick Currency traders. This is Rob. I'm joined by Ankit. This is the Currency Room, and I got to say, great job to our traders this week. You guys killed it. Well done. Let's not give it all back. Let's be rational traders here. All right, in this session, we're going to be talking about the news of the week. We're going to take a look at the market. We're going to score everything from +3 to -3, and that tells us where to go hunt for our trades.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Let's go ahead and start with what equities did last week. Equities were strong, and they were strong all week long. I actually thought we were going to get a pullback into options expiration, the monthly options expiration, but every single bit of selling was bought. There's a lot of strength out there. This market is what I call bulletproof. Bad news is coming out, it bounces right off of it. Bond yields shoot up, they don't care. It doesn't really matter to this equity market. There's just a lot of money pouring into risk-on investments at the moment around the world. So we talked about the dollar last week, and Ankit had a great call that the dollar is now one of the stronger currencies. It's breaking out its downtrend. It's not like it's running, but it definitely is showing us that the trend change has happened. And as long as those bond yields stay around this 4.4%, I think that dollar could be a nice trade to the upside. We'll take a look at all the charts at the end here. And I was surprised that Ethereum broke out and ran. None of the other cryptos broke out and ran. Typically, they all move together. And so when you get one breakout and then none of them break out, none of the rest of the cryptos break out, it's usually a bad trade to chase that one breaking out. Now, if multiple ones are breaking out, that's beautiful. Ethereum didn't care this week. It broke out and ran all the way up to the 3,500 area, which is the highest it's been for a while. Lots of news last week, lots of inflation news. Let's talk about it. Canada inflation, hotter than expected, a little bit hotter than expected. The US CPI came out very mixed. The core CPI was a little bit less. The headline was a little bit hot. The year-over-year number was hot. But again, in line, not too hot, not too cold. We got CPI out of the UK, which was 0.2 higher than expected. This actually strengthened the pound. The pound was looking pretty weak at the start of the week. And after this report, it definitely firmed up quite a bit. And let's jump down to Aussie employment. You can see much worse than expected. The unemployment rate ticked up. And this number right here, I think was the biggest surprise and really the thing that's really holding up the equity market is U.S. retail sales strong. Look at that. Strong. It bounced back from last month's terrible reading at -0.9. It jumped back, telling you that this economy is still going strong. I'm not saying it's a gangbusters economy, but the U.S. economy is strong enough to support all of these asset prices. So let's take a look at the numbers for the last week. Let's take a look first at equities. Equities barely up, so basically flat. We'll see that it's just in a high base here. Crypto had a very nice week. Gold was flat. Oil took a little tumble, but oil's been volatile lately with some of the news happening overseas. Here we have a beautiful, beautiful high base. A beautiful high base. Typically, we see these high bases break out once the 20-day moving average starts to push on it. So let's say this 20-day moving average keeps going. It tells me that we might have another week to go until this market breaks out to even more new all-time highs. But there's no pull. I mean, if there's a pullback here, it's going to be very, very shallow, very shallow. I think it's just a matter of time until we break out. Ankit, do you think equities break out this week or next week?
I mean, I think that's just a matter of time. We are in this summer trading environment. Volatility is low. I won't be surprised if we just go a bit more consolidate around these levels. But again, we can break out next week as well. I think this, like you said, like it's a perfect way to describe this market. This is a bulletproof market. Now, just want to remind everyone that, August 1st is where everything got pushed onto. So perhaps, people are going to start looking up to that date. So I won't be surprised that we maybe consolidate a little bit here, maybe till August 1st when we get a little bit more clarity. So, but overall, again, this is not even a pullback. This is just a base. So market just looking pretty strong.
And if we take a look at what happened in the Forex world here, we continue to like dollar yen. We've talked about dollar yen being the best trading pair out there at the moment. Again, for another week, I guess it's the second best pairing. Aussie dollar would have been the best pairing, but these are the two currencies that are usually having the biggest inverse moves from each other. So we continue to like dollar yen, and we continue to like it mostly on the long side rather than short side. The European currencies were virtually dead last week. Nothing really going on. Same with the Kiwi. As we always say, you need to be laser focused on only trading the things that are moving. If you were trying to trade Euro Swiss franc, nothing's going on there. Pound Kiwi, nothing's going on there. Make sure you're in the stuff that's actually moving. And right now, dollar yen looks to be the best. Coming over here, as you can see, the rest of the cryptos consolidated. Bitcoin Cash, they consolidated. Ethereum had a monster week, up 20%. Litecoin up 10%. Just a monster week on Ethereum's part. All right, we've covered on equities. Let's take a look at bonds. We got bonds. Not a whole lot to talk about. 4.6 to 4.2 is the range. We're smack dab in the middle of that. That is going to give a little bit of strength to that dollar, especially if we stay in the upper half, the 4.4 to the 4.6 area. Here is the move on cryptos. Just a beautiful breakout we had on the basket. And you can see a high base, long upper shadow on Friday, but that just means that there's a pullback coming, which means another buying opportunity for crypto. So I continue to like crypto to the long side. Let's talk about the news next week. We've got elections over the weekend in Japan. I do not know anything about Japanese elections, so I have nothing to talk about other than if you're trading the yen, you need to be aware that there is potentially major news coming out that could move the yen quite a bit. Again, I don't know anything about Japanese politics, so all I know is there could be a move. If it comes and goes on Sunday with no big move, then I think you can just forget about the election, at least for Forex trading. As you can see, everything is further down in the week, and really not even until Thursday. We got European manufacturing numbers. We also have the ECB meeting on Thursday morning and the press conference 30 minutes after. So Euro on Thursday should be a good trade. I think that if you're looking at a news-based trade, I think Euro on Thursday looks very interesting. So to wrap up this week, we think that the risk-on move continues. That being said, we're only seeing risk-on in crypto. We're not really seeing the risk-on move really get into the Forex market where we see things like the Aussie, the Kiwi, the CAD running. Right now, Forex is a little bit of a mess in the fact that it's not doing what it's supposed to do. Whenever that happens, when correlations aren't working, stop looking for those correlations. You really just need to say, okay, there's no correlation now. I'm going to throw out the thought that, oh, bullish equities, I need to be long these currencies. It's not working at the moment. We just have to adjust to where the market is. So let's go ahead and take a look at everything and score it from +3 to -3. Let's take crypto here. We got crypto, Bitcoin just doing a nice high base. That's all it's doing, high base. We love these patterns. It's probably going to stay here for a while. At least that's what technical analysis says. As I said earlier, typically this 20-day moving average has got to get up there to break it out. It doesn't have to do anything. I say it doesn't have to follow any of these lines I'm drawing. It can break out whenever it wants. But I think a breakout is inevitable here on Bitcoin above the, let's call it 121, 122,000. We got this little wick up here. I like this. And I think that while things are basing, one of my strategies I really like is to pick up things at the bottom end of the base. The bottom end of the base here. So anytime it gets down to this 115 area, I think that's a great place to nibble with maybe a 25% position, maybe even a third of a position, to where you're just nibbling. So when it does move up to 120, you've got a great cost basis, and if it breaks out, maybe you grab another little bit of a trade, and if it fails and falls back down into the base, you've got a great cost basis to be patient and wait for that inevitable breakout. So I like Bitcoin, but I like grabbing it in the 115 area at the low of its base. Bitcoin Cash looks like a pretty decent bull pullback here. Just a nice bull pullback. Yes, we lost some of the gain, but I think you can buy this one long right here, right now. It looks like a nice breakout. Here is Ethereum. What a great move. Bursted out of that high base. It was just there for about a week. Big volume as well. Okay, it's had a big run, likely going to base or pull back, but it's a buy after it does that. Let's come over here to Litecoin. Litecoin has been lagging. I mean, we barely got a 20-50 moving average cross just this last week almost. It's looking good. Same thing here. We just broke out of about a 7 or 8 day base. Let's let it come back down, back down into the high 90s. I think the high 90s are a nice little place to look for an entry point for a bull pullback. As you can tell, I like cryptos. I think cryptos are moving the right way. And what I mean by the right way is that they're following the correlations. We have a bullish, low volatility market right now. This is where cryptos typically shine, where everyone's looking to put money to work in risky assets. All right, Ankit, let's jump over to Forex.
Absolutely. Well, let's just start with the US dollar. And like Rob, you said earlier, I think it was, just the way things are moving in the dollar, you can see that we are getting above that 20 to 50 moving average, which if you look back, we haven't been above that, above that level since February of this year. So that's significant. Now, the intensity of the move, it's not as strong as what we've seen in the European currencies. Maybe just the beginning stage of it, but we have seen the dollar turn around, but I would say that there's still a lot of pull and tug happening here in this dollar here. But again, like I said, I think this could be at the beginning stage of it. I still like dollar to the upside. Again, the pullbacks are getting bought out, and that's exactly what we want to see. Previously every bear rally was getting sold. And now I think what we're going to look for is those pullbacks are getting bought out. So you can see that there are days like today where, you get the trend and the velocity on the opposite side. And those are the days you probably don't want to trade it. But I think outside of that, I do like, buying the dollar on dips here, based on this price action. Now we talk about relative strength of weakness. I mean, this yen is just screaming out short. Right now, there's not a whole lot on the way. And I think, compared to what we saw last year, we saw a massive, rally in the yen. And I think this is the summer where it's just setting up to kind of fall apart here in the summer months here. So overall, I think everything is pointing out to the downside. Bases are getting sold. I do like this yen one further short. And again, once these elections are behind us, I think we'll probably see a further break in this Japanese yen. Now, talking about European currencies, and I must say that, if you take a look at this one, they are consolidating. They are not pulling back. And again, one of the things I'm surprised at is that after the intensity of the move, I talk about rotation. I'm not really seeing rotation happening where money's coming out of the European currencies. So maybe this will take a little longer, but right now, I would say it's not it's consolidating here. It's not breaking out in new highs, but at the same time, it's not really falling down. Euro is exactly doing the same thing. So just keep that in mind as you set expectations for those currencies. Maybe that's another currency to play, in a big way on either direction because it's consolidating. But I think once it really breaks out the consolidation, I think the pattern and the trend still looks to be upside. So the euro and the Swiss franc, I still like it at the upside. And then here we are with the pound. And I must say that, out of the European currencies, pound's the one that I do like on the short side. Because this is a currency now making lower high and a lower low. You can see those little pivots that we've seen in the last few weeks where we're constantly making lower highs and lower lows. Now, this is a support level that I think is going to be key. If it does break below that support level, I think there's definitely more room for for this to fall further, and especially in the European currency bunch, where some of these currencies have done really well. So pound definitely goes on the top of the list for me as a potential short. Now, when we take a look at growth currencies, well, I've talked about this last week as well. I think CAD is just following what the US dollar is doing. So I think we just have to take a look at what dollar CAD is doing, but I don't really see them deviating as much. So we'll probably see a positive correlation in the coming weeks ahead. Now, the big turn or big change was really in that Aussie. So remember, one thing I talked about last week is that, hey, this is a major break that happened in the Aussie. So you can see that technically speaking, it did break out, pull back, prior resistance is now the support. So it's still holding that level. But one of the things that really shifted this week was that really bad job support out of Australia. So and we definitely noticed that a rotation happened where, for the most part, we have seen Kiwi done really poorly compared to the Aussie. Now, Rob, if you want to pull that up, the Kiwi here, as you can see that there's a little bit of a change happening here, a little bit of divergence happening here. So I think based on that, and even if we take a look at Aussie Kiwi, which we'll take a look at it when we look at charts, I think maybe in the shorter term, Aussie likely to underperform here compared to the Kiwi. So I'm no longer in that bullish camp in the Aussie. I think in the next few weeks, Aussie probably stay under pressure, and especially if the dollar is going to strengthen, I think strong dollar is going to weigh down on some of these growth currencies as well. But comparatively, I think Kiwi is holding a little bit level that level a little bit better, even though the trend is on the downside. But I think Aussie Kiwi is the one we need to pay attention to going to next week. Back to you.
Thanks, Ankit. I want everyone to take a look at this trend scoreboard because just last month, let's go all the way back to early to mid-June. Do you remember how terrible trading was? And I don't want to say it was like the worst I've ever seen, but it wasn't great. And we had most of the currencies that were in the 0, +1, -1. Most of them were here. And we said, hey, there's only a few opportunities out there. This is where we have to be patient. This is where we have to trade less because trust me, the market will change. The market will turn. Everything is cyclical. And here we are a month later, and you guys are killing it. Like you're doing really well at the moment. And it's because the markets are tradable right now. But back in June, when they weren't, some of you were banging your head up against the wall saying, why aren't my trades working? It was nothing about you. It was about you were trying to trade a market that was consolidating and not doing anything. So here we are. We've got a great trading market. As you can see, almost everything is moving here on a trend score. So it's just a matter of finding the best opportunities. And what's hot right now? Well, crypto. I think crypto looks really good at the moment. And we got Aussie and Kiwi. I don't love them because, again, their daily charts just don't look great. So really, if I'm looking at things, it's like, I got to go down to Euro and Swiss franc maybe, but they're consolidating. I really am only going to look at one thing with you, and that's just the dollar yen. I still think dollar yen is the place to be. And then once the European currencies break out, then you jump on board those. So dollar yen is the only chart I'm going to take a look at with you because it's really the only thing I like. I also talked about what to do with Bitcoin. I think that one looks interesting here, waiting for it to break out of its base. Here we have dollar yen. Yes, it's reaching these resistance levels. But I want to just point out how to read these candles. I love the candles. As you can see here, we came up, hit our head, and then look at this. 3 candles just tumbled here. That was a major point where everyone said, okay, we're no longer buying this, we're selling it. And it came down. Even over here, we had, one down day, one up day, then a big sell-off here. Take a look at how different this price action is. This is much different price action. We had that day on Wednesday where we plunged, and then look, it recovered. It recovered, and then the next day there was buyers, and there's buyers here on Friday. So for me, this one is just consolidating at resistance waiting to punch higher. And you can see 150, 151 is a very decent target here. And if we come in here in the 4-hour chart, we're just seeing a beautiful, I guess you could call this a base or a ascending triangle pattern. Doesn't really matter. It's consolidation from a big run, telling you you want to be long this currency. The only question is when. As you can see here, this is a 4-hour chart. I mean, we're going back 10 candles here, so 40 hours. That's like 2 days of just nothing, absolutely nothing. How do you get into these bases? I like to limp into them. And what I mean by that is that I used to say, oh, I'm going to wait for the breakout. I'm going to wait for the perfect moment to get that breakout. And sometimes I would be there, and sometimes I'd put orders out there, and sometimes I would miss them. And a lot of times I'd get that breakout, and then it was a false breakout, and then it would fall right back down into the range, which was frustrating because my stop had to be fairly tight because I was getting it up here at a breakout and get stopped out for a loss, when inevitably 4 days later, it took off and ran. It's why I like limping into these. Say, hey, you know what? I'm going to take, let's say I'm going to take a 3-lot position. Let me get into a lot here. And again, I'm going to have my stop way down here, really far away. Let this thing move. And then if it does break out, hey, I grab another lot. Now I've got a much better cost basis, and I can have a stop at a decent place to where if we do pull back into the range, then I'm going to be okay. And I can wait for it for the eventual breakout. So for me, dollar yen, I think you take I call it a teaser position, or you limp into it. I think is going to be the best trading pair again this week. So this moment when I'm looking at Onkit, what are you going to want to take a look at?
Hey, Rob, I would agree. I think I'm on the same page here. I love the risk to reward. I think it just, using the right time frame. And you notice, with this pattern, we could consolidate for a little bit and then break out. So I think the way things are setting up with the dollar yen, that now the prior resistance is becoming a support here, which was around 148 area. So I think the next level of resistance is about 151.20. So I think there's, easily there's nice little 250 to 300 to be had over there. So that's the one I'm looking at. But just from a technical perspective, I think the only other thing I like is pound dollar. And that again is purely based on that chart. And if you could just go on the daily chart, just that's where I want to sort of highlight there. You can see that this thing, I mean, right now we're in a velocity chart, but even though if you take a look at a trend chart, we are below the 20 to 50 to moving average, making a lower low. And as you can see, even the bounce that's happening is anemic. Even though we seen a recovery in the pound, it's just not that strong a recovery. That's exactly what we want to see. Is where when trends are knocking down, the retracements get smaller and smaller, and that's what it gives us the confirmation. So I do like pound dollar just from that perspective. One thing I'm looking for pound next week is for that support level to be broken. But you can see that support level is still a little far on the basket, but this one is already at the support. So this is the one that I'm just gonna use it as a support and try to get in as it breaks that level. As you can see that once it breaks that level, this can easily get down towards that 130 area, which was only where we were only like back in May. So I think that's a decent target to be had on this currency. So it's just a matter of getting that movement there. So those are the only two ones. But outside of that, again, when things are Aussie Kiwi is the one that that's what I was referring to earlier. This one, it looks interesting to me because as you zoom out, you can see that this was a very important level of resistance that we did break. As you can see that for the last few weeks, there's a big divergence taking place where Aussie was just outperforming the Kiwi. So this is a very nice pullback. Now, question is this a pullback that will get reversed, or is that a pullback that falls below? As you can see that today's candlestick is right on that. So if you're trying to decide, should I go between the Aussie or the Kiwi? Well, take a look at the Aussie Kiwi. So this is the one, again, I'll be paying close attention to into next week to pay attention to that relative weakness. But I think we're on the same page here, Rob. We're looking at the same things.
To wrap this up, we all like the yen short. I like crypto to the upside. Here's the thing on crypto. I like Bitcoin. I like Bitcoin Cash, but I'm not sure that they break out and run this week. I'm just thinking it's going to be bullish here over the next couple of weeks. And I want to be looking for opportunities to put some money to work there. Other than that, I'm looking dollar yen. I think that's still the best trade. I think the euro looks really interesting on Thursday after that ECB meeting. Maybe that euro can break out. It's probably going to pull that Swiss franc up with it. And then maybe those European currencies start to become tradable again. Thanks for joining us. Everyone have a great weekend. Goodbye, everybody.